Hello, Tiernorts, and welcome to this daily market commentary for Friday, the 14th of June, 2019. And I am, in fact, including, as I will do for every Friday commentary, the rundown for the crypto markets over the weekend. This weekend being a very good example of what can happen in the crypto markets while the rest of the financial world takes a well-earned break. Before we get going, a big shout out to all those fathers out there. A very happy Father's Day to you. I hope you've enjoyed yourselves and had some time to spend with your families. So what happened on Friday? Well, Friday will be a bit of a mixed day for crypto, with Bitcoin attempting to break the 8,400 level. However, much of the rest of the market was lower as Bitcoin reaffirmed its dominance. The one meaningful catalyst appears to have come from a company called Vice Ratings, who upgraded their overall rating for Bitcoin to B from B-. While they didn't recommend buying at current levels, this upgrade reaffirms BTC's highest rating amongst all coins. So I think we saw a few traders probably buying BTC on the back of that, and maybe selling out some of the other coins against that, a bit of a cross play, if you like. The weekend, well, weekends in crypto can be interesting. Liquidity obviously becomes at a real premium at the weekend, and this one was certainly not one to be missed. Bitcoin closed around 8,400, I think, on Friday, or I say closed was around 8,400 on late Friday afternoon in New York. We rallied up almost $1,000 over the weekend to hit a high on Sunday of 9,391, which is a new high for the year. Ethereum also jumped up to 279.20, and Ripple traded up as high as 44.20. So the big question: why do we just get $1,000 moves in Bitcoin out of nowhere? Well, sometimes you could argue we could. I've seen various reasons given why we had this move. I'll go with two of them, aside from the usual liquidity constraints. First of all, it was announced last week to a fairly lackluster response, but I think the market started to get a bit of a handle on the importances, and this is the Backed Futures Exchange will start derivative testing on July 22nd. This is important, and it will give institutional players, assuming everything's successful, it will give them a real enhanced access to the crypto markets. So, that is important. Secondly, and maybe the most powerful pertaining to Bitcoin, a lot of conversation around what's referred to as Bitcoin halving, the block reward halving, and the potential impact on supply, limiting supply. I'm not going to waffle on here around exactly what that is. You can do a little research of your own, but I think that's probably getting to be on people's minds, and probably explains why Bitcoin has led the way over the weekend. At the time of writing here, around 5 o'clock US Eastern Standard Time on Sunday afternoon, Bitcoin has dropped just back below 9,000. So obviously it's off its highs, but many of the other coins have dropped back and pretty much given up all the gains of the weekend. Ethereum back down to 264.20, and Ripple back down to 41 cents. So I think that's something to keep an eye on. Sometimes these things just they just materialize over a weekend, and you get these exacerbated moves, which really are a function of liquidity. So some things to keep an eye on this week for sure. On the FX front, well, obviously FX is closed over the weekend, but Friday was all eyes on US retail sales data, which came in strong at plus 0.5%, and a slight upward revision also to April's number. This saw the dollar gain across the board, taking euro down to a low of 1.1203, sterling to a low of 1.2580. Aussie also fell below a support level I highlighted last week at 69 cents to touch a low of 68.62. Dollar yen, which I highlighted on Thursday, traded up as high as 108.58. Equity markets were caught between the better US data and ongoing evidence that Iran was responsible for Thursday's attacks in the Gulf of Oman. Weak Chinese industrial production data on Friday also weighed on stocks, with the Dow Jones opening down over 100 points and much of Europe also lower. Weak stocks also pushed gold higher, with the yellow metal trading over $1,350, $1,350 for the first time since April 2017. However, by the end of the day, the Dow Jones was down just 17 points as the market continues to believe a Fed rate cut is around the corner. The tech-heavy NASDAQ and also the Russell Index were down a little more, just shy of 1% on both. So, technical time. What do I want to show you on a technical time? Well, here, which we've had up the whole time, is a chart of it says DXY. DXY is basically just the symbol you would put into a chart for the US dollar currency index. FX. When you're looking at the dollar, the dollar. You're looking at the euro, you're looking at sterling, you're looking at dollar against a whole basket of currencies. And when you're trying to look at those individual currencies, it can be a little bit cumbersome trying to keep track of, where's euro gone, where's sterling gone, where's Aussie gone, etc., etc. So the DXY allows us to see a much clearer picture as to its direction and key levels. And this daily chart we see here shows how the dollar has been trending higher since the middle of 2018, going back to here, and you've got a really strong trend line here in blue, which has been touched 3-4 times now, most recently on the 7th of June, where we saw a nice bounce off that level. Also at that level, we also have the 200-day moving average, which is the orange line here, and we can see that was tested, well, essentially right at the same time and the same level. So we've got a bounce off there. So that's a really strong level of support. Excuse me. Both the trend line and the moving average have held, and despite the views on a potential near-term Fed rate cut, the dollar has rallied off those levels up to, as you can see, up to a level of 97.45. So this chart is definitely worth keeping an eye on, as it gives a really good view of longer-term moves for the dollar, and of course has these two support levels here. It's interesting, I think, that the thoughts around a Fed rate cut was really only sort of started to hit the markets in earnest over the past couple of weeks, and yet during that time we have seen a rally in the dollar. It's I think the market takes it. Yes, the interest rate differential potentially could contract by 25 basis points, but the offsetting value, if you like, to the US economy of a rate cut would more than outweigh that in terms of flow. So I think that's why the dollar's actually gained, even though the market's looking at that potential interest rate cuts here. So one to keep an eye on, and certainly as we head into the next Fed meeting. And with that, I shall wish you all the very best of luck for this week. I do intend getting this camera working so you can actually see me as well as hear me, and hopefully we'll have that working by the middle of the week. So good luck this week, and look forward to speaking to you tomorrow. Cheers.